You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Wednesday, January 9th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our top story of the day, first story of the day, is from investing.com. It's the top 5 things to know in the market on Wednesday. First thing to know is U.S.-China trade negotiations end on an optimistic note. The U.S. and China ended a third day of trade negotiations, extended from the initially planned 2 days of talks, on an optimistic note on Wednesday. Chinese Foreign Ministry spokesman Liu Kang said that the extra day of discussions was a sign that both sides were serious about the negotiations, and noted that they had made progress despite the fact that some disagreements remain on structural issues. The meeting of mid-level officials was expected to pave the way for higher-level talks between U.S. Trade Representative Robert Lighthizer and Chinese Vice Premier Liu. That is reported to take place later this month. The world's 2 largest economies must reach a deal before a March 1st deadline, at which time the U.S. will hike tariffs from 10% to 25% on about $200 billion in Chinese goods. The second thing to know today is stocks gain on positive potential and to U.S. Sino trade talks. The upbeat interpretation of the progress in trade talks between China and the U.S. supported stocks on Wednesday, with global indices rising across the board. Asian stocks closed at a 3.5-week high on hopes that easing tensions would lower the danger of a severe global economic impact. European equities shared in the relief rally, with the broad pan-European Stoxx 600 up around 7%. Third thing to know today is Fed is in focus with minutes and appearances. On the economic front, all eyes will be on the Federal Reserve as traders peruse the minutes from the last policy meeting and wait for what will be the first day of a deluge of appearances from policymakers. The minutes from the Fed's December meeting will be released at 2 p.m. Eastern. At the meeting, the Federal Open Market Committee voted to increase interest rates for the 4th time in 2018 and indicated that 2 more rate hikes this year are likely. Ahead of the minutes, Atlanta Fed President Raphael Bostic Chicago Fed Chief Charles Evans and Boston Fed President Eric Rosengren are all scheduled for speeches throughout the day. The appearances will serve as a prelude to an appearance from the Fed Chairman Jeremy Powell, who is due to deliver remarks at the Economic Club of Washington on Thursday. The fourth thing to know today is the partial U.S. government shutdown continues after Trump press conference. The partial U.S. government shutdown entered a 19th consecutive day on Wednesday after the American President Donald Trump called on Congress to give him $5.7 billion in funding to help build a wall on the U.S. border with Mexico. Trump said in a prime-time televised speech after Tuesday's market close that there was a growing security crisis at the U.S.-Mexico border and reiterated that Democrats needed to step up to support the initiative. But Trump stopped short of earlier hints that he could use presidential powers to declare an emergency as a first step towards directing money for the wall without congressional approval. Senate Democratic leader Chuck Schumer and House of Representatives Speaker Nancy Pelosi delivered televised rebuttals to Trump's speech, arguing that the wall would be ineffective and too costly. The fifth thing to know today is the Bank of Canada expected to hold on interest rates. The Bank of Canada is widely expected to keep interest rates on hold and reiterate its plan to raise them gradually. The decision is due at 10 a.m. Eastern on Wednesday, with the press conference to follow an hour later. Rates aren't in focus, but the statement will have to address lower exports, cheaper oil, and slower global growth. At the same time, Bank of Canada Governor Stephen Poloz is consistently optimistic and said he could try to retain a hawkish bias. The bank held steady at its December 5th meeting and suggested the pace of future hikes could be more gradual, citing disappointing growth and low oil prices. Our second story today is from investing.com as well. There's a bond market warning seen in the weakest Treasuries demand since 2008. As the U.S. government kicks off its debt sales this year, here's one potentially worrisome sign for traders to keep in mind: the steep decline in demand at its bond auctions. Of the $2.4 trillion of notes and bonds the Treasury Department offered last year, investors submitted bids for just 2.6 times that amount, data compiled by Bloomberg show. That is less than any year since 2008. The bid-to-cover ratio, as it's known, fell even as benchmark Treasury yields soared to multi-year highs in October before falling back to their lows last month. Granted, it's not as if the U.S. will have trouble borrowing as much as it needs, and there's little in the data to suggest weak auctions lead to bond losses. Yet the drop-off serves as an early warning that demand for treasuries may not keep up as the U.S. goes deeper in the red. Debt supply jumped in 2018 largely because of the Trump administration's tax cuts. Forecasts show the deficit could soon swell past $1 trillion and stay that way for years to come. Our third story is from CNBC.com. Plunge in rates sparks 23.5% spike in mortgage applications after unusually weak holidays. The combination of lower mortgage rates and an unusually slow end to 2018 caused mortgage applications to surge to start the year. Overall volume jumped 23.5% last week from the previous week, according to the Mortgage Bankers Association's seasonally adjusted index. An adjustment was also made for the New Year's holiday. Volume was still 9% lower than a year ago. A sharp drop-off in interest rates to the lowest level since April sparked a mini boom in refinancing. Those applications surged 35% week to week to their highest level since July. Volume was still lower by nearly 22% than a year ago, when the average rate on the 30-year fixed mortgage was 51 basis points lower. And that, ladies and gentlemen, is news you can use for today, Wednesday, January 9th, 2019, your Options News Rundown. I'm Dan Passarelli, Trade Smart. Have a great day.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.